Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, August 19th, 2019, and we are now in the final hour of the market. As I mention every day, I believe that the closing prices of the day are the most valid prices for me to make my buying and selling decisions from. So I spend most of the day just going over the chart, not being distracted by any intraday trades, and then at the end of the day, with that closing price, which again I feel like is the most important and valid prices, that's where I'll make my buying and selling decisions from. So thank you everybody for coming by today. I appreciate it. I hope that the time you invest here pays off for you. You know, I've been trading for 24 years, and the reason I started this channel was I really wanted to help people trade better, lose less money, hopefully make money, and share with them what I've learned over the last 24 years of being as being a full-time trader and what I've learned. So thanks again for coming. The market we're having a good day today. The Dow's up 275 points, the Nasdaq's up 110 points, and the S&P is up 37 points. So green all around. And we're having a great day. So let me just make sure everybody can hear me. Hey, there's Brian. Brian 512. How you doing, Brian? Good to see you as always, my friend. Thank you for coming by. I appreciate it. All right. Well, listen, the format for today is, first of all, we're going to take a look at all my current positions, when I bought them, why I bought them, and how I'm going to manage them going forward. Then when we're done with that, we're going to spend a few minutes on trader psychology. As you know, trader psychology, in my opinion, is the most important skill that you can develop. And it is really a skill of, dealing with fear and greed and your ego, emotions, following your plan, doing what you're supposed to do, not making trades you're not supposed to, not getting out when you just have a gut feeling, you know what I mean? Not being impulsive. I think impulsiveness is the real killer of retail traders. So anyway, we're going to do a few minutes on some trader psychology. Then we're going to come back. We're going to go through all of the stocks in my watch list, and we're going to look for potential setups for today. The best setups, in my experience, happen when you have multiple indicators happening around the same levels, the same price. I look at moving averages as groups of buyers and sellers below me and above me. I factor in MACD, I factor in RSI, I factor in V1, V2 entries. So in my opinion, the best trades that you can have are ones where you have multiple indicators lining up. In other words, you have multiple groups of buyers lining up. So anyway, we're going to go through, we're going to see if we can find any of those for today. And then after that, after the market closes, if you guys have any questions whatsoever about what I discussed here today, if you need some clarification or if you have some trading issues that you're dealing with, just please let me know. We'll see if we can work those out. And also, if you have any particular stock symbols that you would like me to look at, I'm happy to give you my opinion. And and then we're gonna have to run the US legal disclaimer. So anyway, that is the plan for today. So I'm gonna run this legal disclaimer. It's 40 seconds. Hang tight, and I'll be right back. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Well, let's go through my positions, and we'll talk about when I bought them, why I bought them, and how I'm going to manage them going forward. So today Let's see, we're starting out with DDM. DDM is a double leverage Dow. I did buy this back on the 16th of August, and this is a mechanical approach for me. The price the previous day closed under the 200. The day we bought it, it closed over the 200. So this is a good back-tested approach to trading the DDM, where you're in the position as long as it holds above the 200 day. If it goes below the 200 day, you go ahead and you get out, and hopefully you take a small loss. But with these mechanical systems, that's what you're after. You're after small losses and then possibly catching a big long trend that's going to overcome the little losses that you have. So it's starting out nicely for us today. As you know, I do phase out as the market moves in my favor, but this is a mechanical system like a robot. So as long as the price stays above the 200, I will continue to stay in. If it continues to move up, I'll continue to phase out until either I'm out of shares or it closes back below the 200. But you can see we did hit two profit targets today already, which is nice. All right, Netflix. I did buy Netflix back here on the 16th of August. And why did I buy it? Well, the previous day it went under the 30 and back over the 30. I could have bought it then, but I decided I wanted to have some more indicators confirming that it was going to be going my way. So I bought it the next day on the 16th, and so we have this beautiful V2 here. Here is day one, here is day two, which washes out day one by a long ways. Day three closes above day one's close. So we have day one, day two, day three. Day two washes out or goes below day one. Day three closes above day one. In addition to that, we also went under this previous range and closed back up into the range. And in addition to that, we did have a double bottom with a bullish divergence. Here's the low. You can see the depths of the MACD are pretty deep. We have a rally. We come back down even lower, but you can see down here, the MACD bars are more shallow, showing that it's running out of momentum on this second move down. And then the trigger, again, was the V2, day one, day two, day three. Day two washes out day one to three, closes above day one, and it closed back into the old range. So that is why we bought it. Today, we're having a nice day. We did hit two profit targets, one right near the top. MACD is positive today, so that is a nice additional confirming indicator for us. So the question now is, how are we going to manage this trade? Well, on the day that I took the trade, my initial stop was a close below halfway of the washout bar. Here's the washout bar about halfway. Now it's moved up nicely, right? So it's moved up 2.23%. So how am I going to manage this? So a couple different ways. The blue line up here is the 50 RSI. If we go up to the 50 RSI and reject it, then of course I would take profits. If it goes above the 50 and holds it, then I'll continue up to my ultimate profit target, which is the 200-day moving average. So that's if it goes up. If it goes up. If it goes down, how am I going to manage this? Well, I would probably, I don't know if I wanted to let it go all the way back down here after having such a nice move. So based upon that, we came from a lower low, which tends to run out of steam a little quicker than a higher low. If we have a close below the previous day's low, I think that's going to be the way I'm going to manage this trade going forward. So if we go up a little bit tomorrow and then the next day we close below the low of the previous day, that would be my exit, because the initial stop down here is now it's too far. I don't like to let winning trades like this one turn into monster losing trades. So so going forward, a close below the previous day's low will be my exit on Netflix. But it's going nice, and really glad we hit that one right there at the top. All right, Philip Morris. So this is a discretionary trade we took here on the 13th of August. And the reason I took this was we had this big bar up. We had this big bullish engulfing bar, which means the price went lower and higher than the previous high and low of the previous day. We also moved right through all the moving averages all in one day, the -1, the 100, the 5, the 10, the 20. I did take a half a position on this because this was a big bar. It felt a little chasey, but you can see it's worked out nicely for us ever since we've bought it. I did hit one profit target today. Now, I think I'm going to go ahead and just take this trade off today. I mean, I could, if I wanted to, use the 5-day EMA as a trailing stop based upon the close, but I don't like how we thoroughly rejected this -1 or this one ATR channel here. I just don't like this, but there's no real answer here. I mean, yes, you could wait for a close below the previous day's low. That would be one other option, but you know, we really did reject this -1 ATR channel. It's downward sloping. That's what I meant, not negative, but positive, but it's downward sloping. And we did reject it pretty thoroughly, washed out the previous day's high, and now we're actually, even though we're still up on the day, looks like the close is going to be below the open. So that's a bearish price action in addition to rejecting the 1 ATR channel. So glad that I hit one right here, but I think I'm going to take this one off at the end of the day and just call it a good trade. All right, well, as you know, I do buy the SPY each day at the close and I sell it first thing in the morning. And I do this every day, rinse and repeat. Buy at the close, sell at the open. Buy at the close, sell at the open. As you can see, I did enter on Friday at 288.85. Had a really nice trade up here to 292.23 today. Got out right at the open. And you might ask yourself, why would you do that? It doesn't seem very technical or very precise. And I agree with you, but this is based upon a back study from Liz Ann Saunders at Bespoke Invest on Twitter. But with this study, you have two options. First option is you can buy the SPY at the open each day in the morning, and you can sell it at the close every day in the afternoon. If you did this since 1993, you'd have actually returned a -13.9%. But if you would have done the opposite, which is what I do, I buy the SPY at the close each day and I sell it at the open the very first thing the next morning. This approach, the approach that I use, returned a 634.2% return just by flipping it over. Instead of buying in the morning, selling in the afternoon, I buy in the afternoon, sell in the morning. And as you can see, this approach since 1993 has appreciated 634.2%. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. And you can see it's not even close. There's a clear edge using this approach. And as with any edge, it doesn't work all the time. You've got to let it work in the long run. That's why it's important that you position size conservatively so that you have time on your side and you can let the trade play out. I take a 10% position size. So if I had $100,000 in my account, I would buy $10,000 of SPY in the afternoon and I would sell it the first thing in the morning. So, it does have drawdowns. It has multi-week, multi-month, multi-year drawdowns here. So, you're playing the long game here, everybody. You're playing the long game. So I've been using this since February 26th, and it's been very profitable for me so far. But keep in mind, you're going to have ups and downs with it, just like any other trading approach. So once again, I did buy it here at 288.85, and I sold it this morning at 292.23. So it was a really nice return. I will buy this again at the end of the day. All right, XLE. So I did buy XLE back here on the 16th of August, which was Friday. And why did I buy it? Well, for a couple reasons. One, the day before closed under the 30 RSI, right? And I don't want to mess with anything under the 30 RSI. The next day, the day that we bought it, not only did it go from under 30 back over 30, but it went from under the third ATR channel over the third ATR channel. And on top of that, cherry on top, we had this nice V2. Here's day one. Here's day two. Day two washes out day one. Day three closes above day one's close, and it closed back up into the channel. So that is why I bought it. Having a really nice day today, up 2.49%. So we did really nail that one so far. This is not a mechanical trade. This is a discretionary trade. So I'm going to be targeting the 50 RSI up here. If we move up to the 50 RSI, of course, I'll be phasing out on the way up. If we hit the 50 and then reject it, that will be my signal to go ahead and lock in profits. My ultimate profit target up here is the 50-day moving average. This is the pink line. So, you know, if it goes up to the 50, rejects it, I'll get out. If it goes above the 50, stays in it, it stays above the 50, I'll continue to phase out until I get to the 50-day, and that's where I will run out of shares. Now, that's if it goes up. If it goes down, how am I going to handle this? Well, probably at this point, it's just going to be a close below the previous day's low, unless we start moving up higher, and then if the 5-day catches up with that, I will use that as a trailing stop. So, but that's the plan. Initial profit target 60.12, which is the 50 RSI. If it rejects that, I'll go ahead and take profits. If it continues up, I'll continue to phase out until I get here to my ultimate profit target. If we have a close below the previous day's low, that will be my exit to the downside. So, you know, it's important, everybody, to play offense and defense. Just like in any sport, you have to play offense and defense. As it goes your way, I like to take profits. If it goes your way, you're taking profits. Then you have to tighten up your trailing stop, right? You have to play defense. So, in my opinion, in my experience, that's the way that you make money in this market, is playing offense and defense. So good trade on XLE, XLF. I did buy XLF here on the 16th of August, so that was Friday again. And why did I buy it? Well, this is a mechanical trade. This is based upon backtest from etfreplay.com. But if the price is below the 200-day and then closes above the 200-day on XLF, that is a good back-tested, profitable, long-term approach to trading XLF. So as long as we stay above the 200-day moving average, I will stay in this trade, continue to scale out. No profit targets, no rejections of a moving average. This is totally mechanical, totally a robot trade. So this is an easy trade. No decisions to be made. Just as long as it stays above the 200, I stay in and I phase out until I run out of shares or closes back below the 200-day. So as you can see, we did hit 2 profit targets today. Got one right at the very top. That's why I like phasing out. Sometimes you get them just right at the very top. So this is an easy trade. It's been a nice trade for us so far. So those are the positions. Just real quick, DDM, we bought over the 200. We're going to keep it as long as it's over the 200, or we're going to continue to scale out. This is a mechanical trade. Netflix is not a mechanical trade. This is a discretionary trade. Under the 30, over the 30, V1, back in the channel, hit 2 profit targets today. So this is a really nice trade. Philip Morris, hit 1 profit target. I am going to get out today because of the rejection of the downward sloping 1 ATR channel, and looks like even though we're positive on the day, we're closing lower than the open. So that, I'm just going to call it, get out of this trade. But this was a nice 5-day trade. SPY, going to be buying that again at the close. This was a great overnight trade. XLE, the V1, the V2, the under 30, the under the third ATR channel back over, and we've hit 2 profit targets there. And XLF, mechanical trade, the close back over the 200. Stay in this as long as it keeps going up. Get out when we close below the 200-day moving average. So that is the plan. So, all right. Hey, Mount Doji's here. Hey, how you doing, bud? Good to see you. Thank you for coming by. Hope you had a good weekend, Mount Doji. How's your trading going today? Having a big day. Boy, it's been volatile. Boy, has it been volatile. So, Mount Doji says, I had an XLF option in place. You bought an option or you sold an option, Mount Doji? I have a feeling he bought one, which was good. All right. So, all right. So listen, as you guys know, I'm a big fan of trader psychology. The reason I beat you guys over the head with it every day is because it is so important, everybody. I mean, in my experience, the reason retail traders and beginning traders lose money is they try to make a lot of money quickly. I mean, of course, everybody wants to make a lot of money quickly, but you know, the old saying is, you know, there's no faster way to go broke than try to get rich quick, right? And this is from Thomas Payne at Trader T Payne on Twitter. I really suggest that you subscribe to him on Twitter. He has such great content every day talking about trader psychology. But you know, what he writes here really ties into what I'm talking about as far as trying to make money slow, right? Larger trades draw in more emotion. More emotion creates clouded judgment. Clouded judgment creates mistakes. Therefore, larger trades create mistakes. And it's so true. And you know, the reason I bring up trying to trade for years and years and years and doing it slowly is that if you take small position sizes, you are going to have less emotion, right? Less emotion, you're going to have clearer judgment. Clearer judgment, you're going to make less mistakes. Therefore, smaller positions sizes create less mistakes. And therefore, you can stay in the game longer. You can get more experience. You can become a better trader. But you know, if you take anything away from this live stream or my channel, is think about the long term. Trade for the long term. Trade with small position sizes for the long term. As soon as you put on a large trade, just like Thomas says here, you're going to have more emotions. You're not going to trade it as well. You're going to make more mistakes. Even if you don't make a mistake, you may get out when you're not supposed to. Not that that's not a mistake, but you know, you may make a judgment call because, oh, I can't stand the heat of this trade. It's too much. If you're trying to make money in the short term, I swear it never works. But it's amazing how if you just take the long-term view, be conservative about it, use a decent system, and just rinse and repeat, rinse and repeat, rinse and repeat each day, that's the way to make money. And that's the way to get experience. So again, last time, larger trades draw in more emotion. More emotion creates clouded judgment. Clouded judgment creates mistakes. Therefore, larger trades create mistakes. So, you know, don't put on too large positions. Use a conservative position size, a 5% position size, a 10% position size, something that's not going to create too much emotion, something that's going to let you trade correctly, trade your process correctly, and make fewer mistakes and stay in the game and get that experience under your belt so you can become a better trader. Because there's no way you're going to become a good trader if you don't have years of experience. I'm sorry to tell you, but it is true. So thanks, Thomas. And again, that's Thomas Payne at Trader T Payne on Twitter. Hey, Frederick's here. Good to see you. There's Frederick from France. You are late. That's okay. We'll forgive you. Mount Doji says, I bought a call on Friday. Good for you, bud. Good for you. All right. So, let's see how we're doing here. Well, I'm happy to announce, guys, that right now, right this second, I have hit a high for the year. Knock on wood, because we don't know how it's going to close. But I'm very thankful for that. And, hitting a high for the year is always kind of a milestone. So we will see what happens. Hopefully I didn't jinx it. So we'll see. We'll see where we close today. All right. Well, let's take a. Oh, I guess I should say I forgot to talk about the puts. Yeah. So I did sell a put on Apple back here on the 15th, down here to the $180 mark. The $180 mark did line up nicely on multiple time frames. Had the 20-month moving average above it, so some support there. Weekly had the 100 week above it, and the daily had the 200 day, and it was also about a 30 RSI. So I did go ahead and lock in my profits on this Apple put. Guess I should have just bought the shares and still in the put, right? Because we did nail the bottom, but regardless, I made about 88% of my premium. So I'm not going to wait another 2 weeks for just 12% more of the profit. So did exit Apple today for a nice profit on the premium, and then Qs. I did sell puts on the Qs at the end of the month down here at 169. And again, the 169 price, if you look at it on the monthly, we have the 20-month above us as some protection and support. On the weekly, we had the 100 and the third ATR channel as protection and support. And then on the daily, the 169 price lined up nicely with the 30 RSI. So when I sell puts, I like to strike price to have some kind of support, technical support on 3 time frames. So anyway, I am out of the Qs and I am out of Apple on the puts. So I have no puts at the moment, and I'm going to have to start looking for some. All right, let's see. Thanks, Frederick. Yeah, it's always a good feeling. It's always a good feeling, but we don't want to be cocky about it, right? But I've been pretty conservative with my position sizes here, and so it's important. It's important to, like I just said in the psychology section, take the long view. Don't take too large positions. The most important thing you want to avoid in trading is becoming destabilized, because when you become destabilized, that's when you make really bad decisions. That's when you put on too big of positions, if it's going your way, or you start taking subpar positions to the upside. So that every day, my main focus in trading is not to make money. It is to make sure that I am not destabilized psychologically. And the only way you can do that is by position sizing correctly, and or not having too many positions at one time or in the same sector. All right. Well, let's go down through the list. So Apple, Apple is doing nicely here. Don't think I can buy anything here today. It looks like we are struggling with that previous high there. I couldn't buy this anyway here. It's just too high. I mean, we did have a MACD crossover here, which is positive, but I don't like the range that it's in here. It's just too high for me. It's above this channel. It has rejected this previous high. Who knows? This could just continue to go up, right? And more than likely it probably will. But based upon the filters that I use, I just can't buy here. My approach does not allow me to buy here. Mount Doji says, I've been eyeing XLI for puts, but I'm not forcing anything. Industrial sector. Buying puts or selling puts, Mount Doji? I imagine probably selling them. Be interested to see what your thoughts are on where you would sell them. Let me know if you hear this. All right, Adobe. Well, we're definitely lower than the open. That's certainly not positive. We've rejected the -1 ATR channel. We've rejected the 10-day. So really nothing there. Yeah, nothing there on Adobe. Silver. Well, well. So, you know, we've been talking about silver. It's been really high up here, third ATR channel. You know, we have a high, we have a higher high. The MACD here is not as high as here, so we've had, you know, a double top with a bearish divergence. You know, I've been talking about waiting for this to pull back into the value zone, move sidewards, trying to buy that dip with the V1 or V2 entry. So it is starting to cooperate in that aspect. I can't buy it here. You know, it's in the value zone. That's step one. Step two is we need it to consolidate and move sidewards. And step three, we need some kind of trigger. You know, another trigger might be if the 5 crosses below the 20 and then back over, like on our previous, we had this huge previous trade back here. It's a little scrunched up here, you can't see, but the 5 EMA was under the 20 EMA. Then we closed above the 20 EMA, and this was mechanical trade, and we just rode it all the way up to here. We scaled out up to there, but nothing on AGQ at the moment. But it is starting to kind of perk my interest a little bit because we're starting to come back in the value zone. Advanced micro devices. Nothing there. Yeah, nothing there. Amazon's having a nice day. Would I buy it here? No, I wouldn't. I can't buy it here. Could have bought it Friday when we had the close the previous day under the 250 and then back over the 50, and then just hold this as long as it's over the 250. I considered it, but I decided to buy Netflix instead. I didn't want to have too much tech. We did buy the exact same symbol back here on the 6th when the previous day we closed below the 250, then over the 250. Did move our way for a couple days. We did scale out, and then I had to get out here when it closed below the previous day's low. This is not a mechanical trade for me. I just used the 250 as my entry. So that turned out to be a positive trade, and then got out and then immediately went up and then immediately went down. So, you know, Amazon is definitely holding support here at the 200 day, but I really can't buy it here. Boeing. So nothing really here on Boeing. We're at a 45 RSI. You know, I would be looking at the 50 RSI as like my theoretical first resistance point here, or the 20. So there's really no good risk to reward here on Boeing. Alibaba has moved strongly up over the 200 day. It's at a 62.35 RSI. I can't buy this here. The day that I was considering buying it was this day. After earnings, we gapped up. We came back down. We tested the 200. I was considering it buying here because it would have been a good risk to reward ratio. Small loss if we were wrong. Multiples of that loss as far as profit to the upside if I was right, but I decided to pass, and I passed because the close was below the open even though we were up for the day. In hindsight, obviously I should have taken that because it has moved nicely since then, but you know, sometimes things get away from you, but I would stand by my decision again because of the close below the open, which is a bad and bearish price action, but it proved me wrong and went the other way. So this is one that got away. Caterpillar. You know, we went under the 30, back over the 30, didn't quite get above the third ATR channel. Now it's above the third ATR channel. It's a 35. Could you buy it here? Yeah, I mean, I guess you could and use a 30 as your stop, but I don't like it, so I'm going to pass on that. DDM we bought Friday when it closed under the 200, back over the 200. We hit 2 profit targets today. Again, this is a mechanical trade, guys. I'll stay in this as long as it keeps going up until I run out of shares or when it closes below the 200. Walt Disney. You can see a lot of price action today was higher and then reversing lower. Tested the 10-day and rejected it. So there's nothing for me on Walt Disney today. There is a good back-tested approach with Walt Disney, and it's the 1050 EMA, but currently the 10 is under the 50. So if it closes back over, that would be a potential for me to get in on a crossover trade. It's a good profitable back-tested approach for Disney, but nothing there today. Hey, Steve Burns is here. Hey, buddy. Good to see you. Thank you so much for coming by. I always appreciate it. It's always an honor. Steve says, "Hi, Greg. Good day today for the Bulls." Yes, it has been a good day. At the moment, I do have a yearly high today. Knock on wood. I don't want to jinx it, but it is a fact. So I'm really happy for that. I know you're having a good day too, my friend. I'm actually just going over Etsy at the moment, which I know you have. So thanks for coming by. Always good to see you. Hope you had a good weekend, you and Holly and the dogs. All right, so Etsy is at a 33.45 RSI. It's did reject the third ATR channel today, but I don't think I'm gonna buy this right here right now. Ford Motor Company. You know, so this is something I'm not going to buy this, but you could buy this. You have a close under the 200-day, back over the 200-day. Just simply from a risk to reward ratio, this wouldn't be too bad, because if I'm wrong under the 200-day, I'm wrong small. If it goes up, we don't know if it's going to go up. We don't know if it's going to go down, but it has the potential to move up, right? I have more potential to the upside than I do if I use a stop under the 200. So, and we did go under, back over. That's positive. We're flirting with the previous low, the previous range. If it rejects this range today, that's a little bit more bearish, but I'm not going to buy this, but I mean, just for an example, this is the weekly. It did reject the 50-week moving average, which is good. It's just it has such a big, strong down move. I just feel like it's going to be difficult for it to move up. But who knows? What do I know? All I can look at is the risk to reward, and this would be a good risk to reward. But I have something else in mind than Ford. Murrit, hey buddy, good to see you. What a day. Yes, sir. Yes, sir. Thank you for coming by, Murrit. I appreciate it. Facebook. So Facebook there's nothing really that gets me too excited about Facebook here. So 5 below, stuck in this range of this big bar here. MACD did go positive, which is good. But I feel like you're going to have some resistance right up here at this previous high, at the 50 RSI. So, it is above the 10-day, which is good. Who knows? This could run up to the 200, but risk to reward wise, it does not give me a good setup. Gold is coming back down, but like I discussed with silver, big moves up do tend to come back down into the value zone before they catch some new buyers. So I'll be waiting to see if we can get some kind of move back into the value zone for a V1 or a V2 setup. I talked about silver with the 520 crossover. We had the same trade here on gold. The 5 EMA was under the 20, then went back over, and we bought it here, mechanical trade, and we scaled out all the way to there. So the two options here would be coming into the value zone, consolidating V1, V2 for maybe a run back up, testing the highs, or the 5 crossing under the 20 and then back over. Google's having a nice day today. Really, I can't buy it here though. It's range bound. We don't have crossovers. We rejected the one ATR channel. I did buy it here, this V2. Here's day 1, day 2, day 2 washes out, day 1 closes above. We had a great day. We scaled out of 2 or 3 profit targets, but then it reversed on us and we had to kind of take a scratch trade. So Nothing on Google right now at the moment. Um, the 1030 crossover is still in place. So if you bought this back here, you would still be in this. If you did this mechanically, you'd have a nice profit, but nothing today. Goldman Sachs having a nice day with the close under, close back over the 200. I considered buying this here, but I want to be a little more conservative, and I bought the financial index as well. So they're going to kind of mirror each other. Any of you are in this trade, I hope it keeps moving up for you. It's a 45.26 RSI. I would be looking to see how it would react around the 50-day moving average and the 50 RSI. So nothing there. IBB is having a nice day. MACD did go positive. I'm waiting for the 530 EMA cross. This is a good quantified back-tested long-term approach to trading IBB. It might get there tomorrow or the next day, right? But it's not there yet. Intel. Having a good day. It's 47.51 RSI. Again, I think it's probably going to find some type of resistance from the 50 RSI above it and the 50 moving average. Maybe, who knows? We don't know, but that's how my brain works. So this doesn't set up for any good risk to reward ratio. IWM, which is the Russell 2000. It's flirting with the 200-day moving average there. Could you buy it over the 200? You could, but I'm not going to, and I'll show you the back test on IWM. It does, okay, so this is being long above it, being out of it underneath it. It does back test positively, but not very well, not compared to buy and hold, only 93.1%. So I think I'm just going to let that one go. But of course, closing above the 200, you could buy it over the 200. It at least gives you a good risk to reward. Close under, you're out, and be open-minded and patient with it if it moves up. But I'm going to pass on IWM today. Johnson & Johnson. Range bound at this point, nothing there. Coca-Cola. Boy, having a nice day there for sure. MACD is positive. We're to 63.38 RSI. A little too high for me to buy here. Lockheed Martin. I think Max in the group, he picked out this move here when we had this nice V2, day 1, day 2, day 3. Day 2 goes under day 1, day 3 closes above day 1. I didn't buy it here. There was something else I bought that day, but that really would have been a really good trade. Nothing to trade today. MasterCard having a nice day. It looks like it's having a 520 cross, which back tests okay. Let's take a look here. It is currently above that high, which is good, but you have the one ATR channel here, 55.65. Yeah, I mean, you could talk yourself into this, but I'm not going to. I did buy MasterCard back here on the 5th. We rejected the 100-day moving average. We rejected the 30-day moving average, and we closed back above. So we did get a really good entry here, and we scaled out all the way to here. So that was a good trade, but nothing on MasterCard today. Merck, doing well. It's a 61.42 RSI. It's just too high for me. It has this previous high up here to contend with. We had this nice move up. We had this move down into the value zone, which I was looking for a dip again in the value zone. And we did get a V1. Here's day 1. Here's day 2. Day 2 washes out day 1. Day 2 did close above day 1. But the filters that I use do not let me get involved with these kind of bars in front of my entry. But the market had other ideas. I guess it would have been a really good buy there, but I didn't buy it, which is okay. Microsoft. So Microsoft looks like it is taking out this previous high. Do we have a crossover? Let me take a look real quick at Microsoft's 520 crossover. So what I'm doing is I'm queuing up here a 520 EMA crossover on Microsoft. Let's see how that back tests. Not so good. See, this is why I like to use ETF replay, because if I see something, I at least want to back test it and see how it did. But it only had a 31.5% back test compared to 264 buy and hold, and the maximum drawdown wasn't that much better anyway. So with that being said, I would not consider buying this, right? Just to point out, sometimes you get really good setups and you hope for the best, but they don't move your way. I did buy here back on the 13th when we had this beautiful V2. Day 1, day 2, day 3, day 2 washed out day 1, day 3 closed above day 1. It was a higher low. It was above all the moving averages. Everything looked great, but it immediately puked on us and went down. And that's how it happens. So I guess the takeaway from what I'm trying to say here, guys, is if you have a great setup, all sorts of indicators lining up, take the trade for sure. Position size correctly, take the trade, but don't fall in love with it just because everything moved your way. If it doesn't work, just go ahead and get out. And, obviously it's turned right back around. It did have a V2 Friday, day 1, day 2, day 3, day 2 washed out day 1. Day 3 closed above day 1, but I couldn't take it because the V2 happened on a gap day, which doesn't allow me to take it. Doesn't mean it's not going to go up. Certainly it did, but nothing there today for Microsoft. Netflix, we have the nice V2 that happened. It's a false breakout from this previous range. We have a double bottom with a bullish MACD divergence. Today it looks like we're closing above the 10-day moving average. MACD went positive, so we have this one. We're just going to continue to hold this one, scale out until we run out of positions, or if we test the 50 RSI and reject it, if it keeps moving up, we'll keep it till we get up here, and this is where we'll run out of shares. On the downside, close below the previous day's low, which would be my stop. Nike. Well, can't do anything with Nike here. It did, here was a higher low. If it closed above the 200, I could consider it. I could consider it today if it closed above the 200 because it's a higher low. So let's just mark that. I don't know if it will or not. 81.43. So we'll just see where that closes. Let's take a look at the weekly on that. Well, the weekly has held support at the 50-week moving average, so that is good. Let's take a look here. All right, so we'll mark that. Philip Morris, I am going to get out of Philip Morris today because it rejected the downward sloping 1 ATR channel. We've had a nice run on it. Looks like the close is lower than the open, even though it's above previous day's low. So I'm just going to go ahead and take this one off. This was a nice trade. PayPal having a good day today after flirting with the 30 RSI, and that was the correct move there with the under the 30 back over the 30. It's moved up nicely. It's a 45.61 RSI. I'm not gonna mess with that here now. It's a 45, so I'm looking at the 50-day, so there would not be a good risk to reward at this point. What do we have? 11 minutes. Qs. Nothing on the Qs today. It is positive that we're closing above, looks like right now at least, we're above a 50 RSI. If it could close above the 50-day moving average, that would also be positive, but nothing for me on Qs. Snapchat. I do like Snapchat today, guys, because we move up, we come down, we make a lower high, and when you make a lower high, you have to wash out that previous low, but we did wash out that previous low. We are in the value zone. Friday, we rejected the -1 ATR channel, and you can see this is a good V2. Day 1, day 2, day 3, day 2 washes out day 1, and this clearly looks like it's closing above day 1, closing back up into the value zone. On top of it, it's a 50.84 RSI. So I am going to buy this as long as the closing price is above Thursday's close. Day one, day two, day three. Day two washes out day one. Day three has to close above day one. So as long as it closes above 15.99, I will buy this. My initial stop on this will be halfway of the washout bar, which is about here on a closing basis. Of course, if it moves up, I'll tighten up my stop. But I do like Snap today. And this is above the 200-day moving average, so I will be taking just want to make sure it's above the 200. It's way above the 200. All right. So yeah, so I do like this V2 here with the rejection of the -1 ATR channel and the washout of that previous low. So I will be buying Snap at the end of the day. SPY, I will be buying that again. That was a nice overnight trade. I will be buying that again today at the close. Square is kind of going up. It's up 2%, but I'm not going to buy anything there. SSO, that's the double leverage SPY. Bonds, you know, we've had this huge move on bonds. Doesn't mean that we're done with bonds, but I would like to see this move back into the value zone here. This is where I'd like to buy a dip on it. Tesla having a nice day today, but no real signals. Twitter, gosh dang, you know, we talked about Twitter on Friday. I would have bought this based upon this nice V2 here, but do you see, here's day one, here's day two, here's day three. Day two washes out day one, but day three did not close above day one's close. 40.65. I think you guys remember I was watching that till the end of the day. If it had closed above, just like on Snap, I would have bought it. And obviously I wish I would have, but again, my signal didn't trigger, right? I have to follow my plan. I have to follow my filters. It didn't trigger. You know, I can't go, well, it didn't trigger, but I think, right? It's just too difficult mentally to not have any rules, because then you can do anything you want anytime and your mind just goes a million miles a minute. Just, you know, have your plan, have your setups. If they don't trigger, don't take them. And of course they're going to go sometimes without you, but that's okay. UNG. Nothing on UNG. Although we are working on a bullish engulfing here. Yeah, I'm not going to get involved with that. UNH actually down today. I mean, look at this sideways movement here, everybody. Boom, 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 boom. This is eventually going to break out one way or the other. We just don't know where and we don't know when, but it will. I can promise you that. I just don't know what direction and how long it will take, but we're building a big base here. We should have a big move off of this one way or the other. Oil doing well. MACD's positive, has the 200-day moving average above it. Nothing there. The dollar, nothing there. The VIX. So VIX is down a ton today, right? I have my eye on the VIX, not right this second, but now we are down into the value zone. We've had this nice rally in the market. We're still under a 530 crossover, which shows that there is still volatility. This is the 1030 crossover. So whenever the 10's above the 30, there's still the chance for a lot of volatility. So I don't know if we're done with volatility here or not. I mean, we're starting to get up 45 RSI on the on a lot of the stocks. This is pulled back into value. So I'm looking for some kind of entry point to get me back into the VIX. We did get into the VIX here when we had this nice V2, and this was one of our best trades of the year. It was up 14%. And it went under the 30 ATR channel, back over, triggered the V2, had a double bottom with the bullish divergence, and that was one hell of a great trade for us. But I am starting, you know, VIX is on my radar now that we're pulling back into the value zone. But nothing there today. Looks like it's under the 50 RSI, so, you know, I would like to pick this up probably down in this range, maybe here at the -1 ATR channel, or or if it moved sideways and got a V1, V2. So nothing on VIX today, but it is kind of interesting. Verizon, doing okay. Don't like how it's closing. Walmart, 61 RSI too high. Energy Select we have. Come on, baby, get up there, hit that third profit target. So I'm targeting the 50 RSI on this. This has been a nice trade. XLF. This is another one of our trades, mechanical trades that we bought on Friday. This has moved up nicely to profit targets. Real estate broke out to a new high, 64.84 RSI. That's great, but I certainly don't want to buy at that level. Utilities, interestingly enough, having a big day today, but still too high. Healthcare, 52 RSI, looks like we do have a positive MACD crossover, but with the 50 and the one ATR channel above here, I can't do anything with that. And pharmaceuticals having a really big day. False breakout to the downside, but it's a 44 RSI. I'm not going to buy that here because, you know, the way I look at this, we'll probably find a lot of resistance at the 50 RSI. So what do we have? We have 6 points to the upside on the RSI and a lot more to the downside. So it looks like the potentials for today, Nike doesn't look like it's going to close above the 200. Snapchat does. I am going to buy a full position of Snapchat today with the rejection of the -1 ATR channel and this nice V2 and the washout of that previous low. And then the VIX, I'm not going to do anything there. So let me get some math done here. $12.94.
Order cancelled.
All right. And 1941. All right. Okay. So no on Nike, yes on Snapchat, no on VIX, and that looks like, so it looks like Snapchat's about the only thing we got going for us today as far as a new position. DDM is mechanical, so this is fine. Netflix is not mechanical, but it's doing fine. No reason to sell it. Philip Morris, I am going to get out here. It's been a good little trade, but I don't like that we rejected the -1 ATR channel and closed lower than the open. SPY, will be buying that at the end of the day again. XLE is fine. And XLF is fine as well. All right, so all right, I'm just
order filled.
Okay, there's that one.
Order partially filled.
All right. So
Order filled.
I did sell the SPY. I did sell Philip Morris, just locked in that trade, but that was a nice trade, and I'm glad we did hit one profit target near the top there today. And let me make sure over here. Yes. All right. So I am going to buy Snap at the end of the day. No Nike. No VIX. Got out of Philip Morris. And that is that.
Order cancelled.
All right.
Order filled.
So the SPY 292.33. and snap. $16.16. All right. So let's tidy up these. So we are out of Philip Morris. Thank you, Philip Morris. And then SPY. Our new entry is at 292.33. And then Snapchat. Oops. $16.16. So, okay. All right. That's our new entry on Snapchat. I'm glad it did close above the 50 RSI, but my initial stop loss on this until it starts moving my way is going to be a close below halfway of the washout bar, because it should not come back down to there if the trade is going to work. So that is that. So listen, if you guys have any questions about anything I did today or any other trading questions or anything, just go ahead, don't be shy, type it into the chat, and I'm happy to answer them. Before I get to the answer portion, I just do want to quickly put in my quick plug that I put in every day and let everyone know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. So if that's of interest of you, if you feel like you would benefit from having me teach you a lesson one-on-one, please let me know. My hourly rates are in the description of this video, and my email is there as well. You can also reach out to me on Twitter and send me a message there. Just so you know how it works, generally it just starts with a free phone call or a Skype call, and I just want to get to know you a little bit better. I want to understand what your experience is with trading, what your challenges are, what kind of availability you have as far as screen time, your financial situation, and what your goals are. And then part of the lesson is, I'll take that information, I will put together a customized lesson based upon what you told me. So I've had really good success with my clients. I've turned a lot of them around from losing traders to winning traders. And I think the most important part of one-on-one lessons is the interaction back and forth between us, and me having you teach me what I just taught you. That's a big part. A lot of people are good with technicals, but I have found people do not usually have a solid plan. They know what they're doing, but they don't put it all together in the context of a plan, position sizing, account heat, all that kind of stuff. So anyway, if you're interested, please send me an email and we'll get together on phone or Skype. And then if you like today's video, or live stream, if you're finding this channel helpful or finding these live streams helpful, please do me a favor, hit the thumbs up button. It does help promote the channel and get it out to more people. And I started this channel because I want to help as many people as I can. So if you could do that for me, I would really appreciate it. Okay. Steve says, VIX under the 200-day moving average. Yes, well, that is a good sign. That's a good sign, right, Steve? So here it is, the VIX. See how we close under the 200. But on the other hand, we still have the 10 above the 30, right? Which, indicates we still could have some volatility. But, this was good. Where do we end up? 249. Okay, so we did end up a little off, definitely off of the highs a bit, but still big day. But yes, the VIX going under the 200 definitely is a positive for stocks for sure, because the VIX is essentially just the opposite of the S&P in many ways, because it's based upon how expensive puts are getting on the S&P. All right. Steve says ERX, wow, was up in percentage terms. I think Steve had ERX today. You had ERX, right, Steve? Pretty sure you did. Look at that. This is 3 times leverage here, guys, right? So this gets a little gnarly, but I believe Steve bought, let me take a guess. I think Steve bought here. Yes. with the under 30, over 30. So Steve had a roaring 6.75% today on his account because it's 3 times leverage. We had XLE. Basically, ERX is 3 times the XLE. Yeah, Steve had ERX. Congratulations, bud. Really good trade. Congratulations. Mount Doji, what does that mean when VIX is below the 200M? So, Mount Doji, how we always key off of the 200-day, like on the S&P, there should be groups of buyers coming in at the 200-day. It's kind of the last stand for the bulls. If it can hold above the 200-day, that's a good sign. If it closes below the 200, it's not so great because the whole group of buyers came in to buy at the 200 and it failed and still couldn't do it. So if the S&P is above the 200-day and holds, that's positive, right? That's why we like to take trades there. But if the VIX is below the 200-day, that's positive for stocks because if the VIX holds above the 200-day, then that's bullish for VIX. And anything that's bullish for VIX is bearish for the market. But if the VIX closes below the 200-day, that's bearish for the VIX, but positive for the market. Does that make sense? Does that make sense, Mount Doji? Obviously, if the VIX has a lot of bullish indicators, that's bad for the market. If the VIX has a lot of bearish indicators, like losing the 200-day, that's bullish for the market. Okay. All right. Well, how did everybody do today? Everybody have a good day? I'm not sure what position you guys had. You guys always see my positions. What's happening with your positions? Anything going on? I know Steve had ERX. I know Steve had, what else did Steve had? Steve had ERX. He had Goldman Sachs. He had... Ooh, let me see. He had DIA and Etsy and Amazon. So Steve's kicking butt today. Congratulations, Steve. Steve's back to equity highs too. Good for you, my friend. Congratulations. Good for you. I just eked it out as well for the year, for the yearly high. REFS Refskid? I hope I pronounced that right. Hi, Greg. Just found your channel. Thanks for the content. Watching from the UK. Oh, good. Thank you for coming. How do you decide what is on your watch list? Do you just trade the large caps? Yes, pretty much. I mean, my watch list, I like to have, some monster stocks in there, the Apples, the Amazon, the Googles. I like to have all the major indexes like the Qs and the Diamonds and the SPY. And then I like to round it out with some tobacco, some energy, oil, bonds. But yes, essentially I do in my watch list, you're generally going to see almost all large caps. From a technical analysis point of view, in my opinion, the more people that are watching a stock at certain levels, certain technical levels, the better, because I feel like that's what makes technical analysis work. So that's why I really like to buy kind of the biggest and the best, that have institutional support, institutions watching them. And then also, I like to buy stocks that I know are going to most likely be around, compared to something that I don't know anything about the stock. And then also the bid and the ask, the liquidity of the large caps is also very good as well. So yeah, I mean, I do change the watch list up occasionally. I might, add something, remove something, but yes, in general, large caps for the reasons I just mentioned. Steve said Etsy, Goldman Sachs, Diamonds, Triple Leverage Energy, and Amazon. Nice, buddy. Murat said, I did very good today. One position up 9%. Wow. I have a large position in LPG shipping. It did pretty good. Let's take a look. Whoa. Is that your 9%er, Murat? That you probably bought down here somewhere? Where'd you buy it? Maybe here? It's a nice V1. It's a nice V1 for sure. Let's take a look. Not quite 9%. Wow. Great trade, Murat. My name is Keith. I forgot I have a terrible username. That's okay, Keith. I appreciate you coming. Thank you so much. So we've got Keith from the UK, Frederick from France, and Murat from Norway. So it's so great to have a little international community here as well. Murat says, no, BWLPG is the one I have. Is that one symbol altogether? BWLPG? Oh, it's not trading in the US. Okay. Well, congratulations. Congrats, Murat. Nice trading. Frederick says, I bought Kerning today, closed above the 30 RSI and re-entered the third ATR channel. Wait and see. Okay, good. Good. We've had some really good trades with the under the 30, under the third ATR channel, and then back over. Brian says, that's kind of crazy they found this channel too. Well, I don't care how people found it, but I'm glad they found it, and I hope you guys find it helpful. And I'm glad you guys are here. Wow, what a day, what a day. So yeah, the only thing we added today was Snap with this V2 here. I mean, we have a lot of room to the upside if we're right. If we're wrong, then we know exactly where we're going to get out. But I do like that we rejected this -1 ATR channel. I do like that we had this nice valid V2. It did gap a little, but you see how we closed the gap intraday and then back over. And I do like that it closed above the 50 RSI. I'd like it a little better if we could get over this tomorrow, but you know, who knows? We don't know what's going to happen. All right, so last call for questions. Otherwise, I'm going to get out of here, go up in the mountains, and go hiking. Frederick says, I found you, Greg, from Steve Burns' list on Twitter. Oh, great. Yeah, thank you, Steve, for putting me on that list. It has brought so many people to the channel, man. I really appreciate you putting me on that. Murat says, I have stock in my radar, and it is CPB. I am fully invested right now. As soon as I have some room, I will look into it deeper. CPB. So Campbell Soup. So, I mean, you know, Murat, the way that I look at these, I wouldn't be interested here at this point because I don't really have a setup. I mean, here's a potential V2 here. It happened in the value zone. I don't think I would have taken this trade because this bar is too large. This one, potentially, it's a V1. Here's day one, here's day two. Day two does wash out day one. This bar is not larger than 1 ATR, and that would have worked out well. Didn't quite get a V2 here, so I probably would not have been able to get in this trade at all, other than here, but I don't think I would have because this bar was too large. But we're at the second ATR channel. We're at a 6381 RSI. I feel like it's a little chasey at this point to buy up here. Who knows? It could just trend for another year. I don't know, but the way that I take a look at trading. So I would have to have some kind of pullback into the value zone, move sidewards, have some consolidation, look for a V1 or a V2 to the upside. So that's kind of my take on Campbell Soup. Yes, I will look at the weekly. Well, I mean, the weekly strong. I mean, this move that we had here, obviously you could have bought a V2 here if you bought it intra-week. Here's day one, day two, washes out day one. You could have bought this intra-week right here. I wouldn't have bought it at the close of the week because it was too high, but while it was still in the value zone, if you wanted to buy intra-week, you could have bought here. But you guys know how I talk about when you have a big bar, it looks really bullish, but a lot of times I'll take a half a position and I'll look for it to come back to the halfway mark. This is exactly why. This is extremely bullish, but it's a little overbought. So, I wouldn't have bought this anyway, but, looking at this chart, where could I have gotten in? Probably here when we held the halfway, because whenever you have a big up bar like this and it comes down, it can hold that halfway. You get some Fibonacci things going on, some 50% Fibonacci levels going on, and that's exactly what happened. But I mean, it's certainly in an uptrend. It's certainly doing well, but the risk to reward ratio doesn't look that great to me at this time. I mean, if you're in this might trend for a long time, but to initiate a new position out, for me, I would not. A lot of volume today on this breakout too. So I am going to be keeping my eyes open here, guys, on the VIX. I mean, we've had this big move up, huge momentum on the upside. We are coming back down, but this doesn't mean just because we're coming down, we're going to go down to all-time lows again. I mean, we are getting into the value zone. One check, one of the boxes is checked for me now. We made a higher high. We came into the value zone. I'd like to see this move sideways. I'd like to see it move sideways, go under the 50, back over, trigger a V1 or V2. And, if you overlay it on to what the market's doing, I mean, the market, we've had a nice big rally. Is it, are we in the latter half of this rally? I don't know. It's possible. But, the way that I look at this is starting to look interesting, which means the market to me may be a little overbought at the moment compared to where we've been. So I am going to be looking for an entry on VIX. And again, VIX is very volatile, guys. So, I usually buy a quarter position of whatever I would buy for a stock because it's so volatile. But I am going to be kind of stalking and watching VIX here in the coming days. Yes, e-cigs do help me trade better, Frederick. They definitely do. I'm glad I started with the e-cigs instead of smoking, because I smoked for a long time and then I stopped smoking. Thankfully, I kicked that habit. It was tough to do, but yes, it makes me trade better. Mount Doji says, did you end up getting Nike? No, I didn't, because it closed under the 200-day. Now, if it closes back above, we can take another look at it. But the thing is I don't like when we play around the 200-day when we're in the 40s. If we're in the 30s, then I can shoot to the 50. If we're in the 40s, then I'm probably only going to shoot to the 50s. right? So I don't have as much potential to the upside. Whenever I'm take trades of the 200 near the 40s, it always causes me problems. Murat says, we have a tabloid paper here. They had a headline on the paper and it was about inverted rates. I went to the office and loaded up. You loaded up on what, Murat? Frederick says, I'm going to start. You're going to start what? E-cigs? Stopping smoking was not as difficult as I thought, but the e-cigs helped a lot, if that's what you're talking about. Mount Doji says, there was a whistleblower for Disney during the last final hour. This happened 2 days after my Goldman Sachs signal. Did Disney go down in the last hour? Definitely went down. This happened 2 days after my Goldman Sachs signal. With the tabloid paper with the headline, is that what you're talking about, Murat? Yeah, so Disney definitely did sell off there. Oh, you loaded up on stocks. Okay. 200 characters are the limit. Oh, okay. Rest of my sentence didn't show up. Okay, you loaded up on stocks. Well, you did well. Start smoking e-cigs to be a better trader. Well, I don't know if that's like a requirement to be a better trader. Probably not. But whatever works, if wearing a headband, you're wearing your lucky headband helps, then put that thing on every day. All right, everybody, I'm going to get out of here, go hiking. Frederick, my friend from France, thank you so much for coming by. Murat from Norway, thank you. I'm glad you loaded up on your stocks and had a good day. Congratulations. Mount Doji, always good to see you, my friend. Glad you had those, bought those calls. Brian 512, thank you, my friend. Always glad to have you with us. Hope you're learning a lot. If you have any questions, please let me know. And then Keith from the UK, thank you for coming by. Appreciate you coming by for the first time. I hope you come back. If you have any questions, please let me know. Steve Burns, congratulations on your great trades. Congratulations on your equity highs. You are the man, everybody. And if you guys don't subscribe to Steve Burns, please do, at @SJosephBurns on Twitter. Let's see. Did I miss anybody? I think I got everybody. So anyway, I appreciate you guys coming by. I appreciate you investing your time. I hope it is paying off for you. And if you guys have any questions that you didn't ask today or you didn't think of, email them to me or send them to me on Twitter, and I'll do my best to get back with you and answer. So, all right. Okay. Well, thanks again, everybody, and hope to see you tomorrow during the last hour of the market. Take care. Bye-bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.